Hey everyone, welcome back to another video. I just wanted to go over a little update on TLT. Today's Friday, July 30th. And so yesterday we got some brand new GDP numbers, and we are now, right now, our GDP is higher than where it was pre-pandemic. So this is an extremely bullish and extremely good inflationary news. So we got 6.5% at an annual pace in the second quarter. So what we was expecting was 9.1 by these economists. They were expecting way more. So it could the thing is we missed expectations, but it could just be that we had the estimate game, right? This is just like it could have been that we were way too bullish on the economy, or the economy actually weren't doing that well as what we might have thought, because we just like opened up everything, all the service sectors are up and running. Like the economy has in America has pretty much opened up, so that's why people were expecting, or economists were expecting 9.1%. But still, 6.5% is nothing to balk at. It's a it's a very strong, solid number. And so you could see that on that news, um, bond yields rose. So the news came out yesterday. Stock market went up, and so TLT. This is TLT went down. But notice how today, the next day, you can see that 10-year bond yields are once again down around 3%. So right now it's around 11 o'clock Pacific time. We still have another 2 hours to go in the market. But I just find it extremely interesting how even though we had really, really good GDP numbers, which should insinuate higher inflation, we still have a negative, almost negative 3% drawdown on 10-year bonds the day after, right? So now, right now, we are at a lower point than where we were yesterday, despite the news. So you could say this was either priced in already, but then looking at the trend of the yields, I mean, we've been on this solid downtrend since beginning of April, pretty much. And so I would just like to bring up the fact that we on TLT are getting closer and closer to either breaking out or breaking below, right? We are close every day, we're getting closer to the inflection point. So we've had, on the technical side, we've had trouble getting past this resistance right here. I'm going to draw it better. It's pretty much like around right here. Yeah, this right here is solid. So you got right here acting as resistance. He has it acting as resistance over here. And once again, all throughout today. Ooh, he's got this little spike. So pretty much to give you a better idea, here's a 20-day moving average on the purple line. And you can see that we're kind of just squeezing right in between these two zones, right? So we're going to be doing something like, here, I have a better illustration for it. So like this. Keep in mind that I drew these lines, I think, way back, like over here, and so they have held up pretty well so far. So you can see that, like looking at this line right here, right? We've been and looking at the resistance over here and the support here, we are getting closer and closer to the wedge, and it's either going to happen today or next week that we're going to either break below the 20, ending this TLT bullish sentiment, or we're going to break above higher. And if we do end up breaking up a bit higher, then I believe that we could be hitting this zone right here, 153, 154, because looking back at it, it was very important, very solid, very strong resistance, and it used to be support, and it was acting as resistance. So this is a big zone. So basically, what I'm trying to get at is odd how we got really good news that would have brought TLT way down, but now the next day after the really bad news, TLT's up. So I think when you see signs like that, it's similar to how back over here we got like CPI numbers that were like 5%, like 5.5%, and despite that, uh, yields dropped lower. The market was basically saying, yeah, I get CPI is high, but I'm not really worried about that right now. So this is an interesting trend that's been going on, and I think there's a lot of great fundamental reasons behind it. A global deflationary backdrop that's behind all this, and a big dollar shortage. And so it's very important that despite what we see, despite what we think that the dollar and dollars in the United States and the bond market is the United States thing, these are international assets, right? The dollar is a global reserve currency, so you have to know what the dollar is doing all around the world. And same thing with treasuries, or not treasuries, but with the U.S. Treasury market. You have to know what's going on in the global economy, not just in the United States. The rest of the world is slowing down. The rest of the world's economy isn't doing so well. So that could partially explain how, if we move away from a closed American system to a more open global system way of thinking, then what the yields are doing, what bonds are doing, makes more sense. So, well, we'll see. I could still be extremely wrong. Here are my positions. Still down around 550, which is around 10% of my position. Most of it comes from these YOLO options that I got that expires today. These were 10% worth of my initial position. These were just straight up YOLO trades. I mean, if these did well, they would have like 5x. So not too bummed out about that. That was 420. So the rest of my real position loss is only around like 130 bucks. So not too worried about that. So we shall see. I could still be wrong about this, but I just wanted to give an update, and I thought that what's going on today is pretty interesting. So I hope this video was useful, and if you guys liked it, please like and subscribe, and I'll see you guys next time.